We're here counting down our 20 favorite energy stocks of the year. Tyler, what is next on your list?
Sure. I'm probably going to get a lot of flack for this one as well, based on some of the things that have happened this year with the company, especially losing a little bit of shareholder value. But I'm going to go with Linn Energy.
Linn Energy is your favorite. It's kind of risky. I mean,
it's a list of 10. It's not my favorite. It's on my top 10 list. Okay.
Okay. Right. But the SEC inquiry, the fiasco about its hedging strategy, the godforsaken Berry Petroleum merger, this is your favorite.
All right, I get it. There's lots of issues that are were associated with the SEC inquiry, but they've been resolved, and because Linn Energy has essentially changed its accounting principles to work through that and make it easier for investors to understand. But accounting principles are kind of a real bit of a distraction of the fundamentals of this company. Both it and its operating arm, Linn have been very adept at acquiring long life, I guess you could say, cash generating assets in a lot of, I guess you could say, unpopular assets here in the United States and fallen out of favor. So what they're doing is they're going in, squeezing about every single last drop that they can out of this thing at minimal capital investment. And I think one of the great ways that they do that is through exceptional operational efficiency. At two of its major production regions, the Granite Wash in Oklahoma and the Permian Basin in the United States, the company has brought down its operational expenses in both of these regions by greater than 11% this year alone. That's pretty impressive when we've seen some of the things in terms of like how much it costs to drill a well and stuff like that. But I don't necessarily agree with the company's hedging strategy. That's just a kind of a personal thing. I think it's unnecessary to overpay for things like put options to protect on downside. But I understand why they do it. Management needs to know exactly how much cash it will generate so, it can meet that very large distribution it has. It has a distribution of 10.2%. That's pretty juicy for almost any investor out there right now. So if you combine strong operational performance, some upside with this Berry merger that is supposed to be happening sometime in the next couple months or so, we'll see, and the recent Permian purchases had, as well as, with that huge dividend it's got, I'm sold on it.
Okay, well, it's not my job to make your list. You're here to do that. You backed up your statement, so I'll concede Linn can be one of your favorite stocks this year. Well,
you really don't agree with me on this
I'm really looking forward to seeing what else is on this list of yours.
Fair enough.
But, check back with Fool.com to find out what else is on Tyler's list. We'll be counting down stocks all week. See you next time.